This is Futures Now. Welcome to the program. I'm Jackie DeAngelis. Joining me today on the floor of the CME, I have Jim Uriel and Scott Nations. Gentlemen, welcome. We're going to be talking about the market. We're also going to be talking about crude oil. But first, gold stuck at around 1180 right now. And of course, we're waiting for the big Fed meeting to see how it moves things around. Jim Uriel, let me ask you this. Rates are going higher. Certainly, gold is kind of stuck in a rut right now. Do you expect anything to happen to be a catalyst for gold?
Well, what I think could be the catalyst is long end rates going even higher than they are. And I believe that's going to happen. And I believe that's only tangentially sort of affected by the Fed. I think the other effect on that is an exodus from German bonds and from some other European bonds. And that might cause a sell-off on relative value trade. So there's two things that I think could potentially force long end rates up. And remember, that value of holding gold becomes less when their other safe instruments starts yielding 240, 250. So I'm not a big fan of gold right now.
And it's interesting, Scott Nations, because we're going to be talking to Peter Schiff in just a couple of minutes about gold. He's told us time and time again on this show that the Fed has no exit strategy. The Fed cannot raise rates. In fact, the market is expecting it, and it's holding gold lower. So at this point, would you be a seller of gold? Do you think gold is going lower from here even?
I would be a seller of gold because Jim has laid out one catalyst that might move gold. Another one would be if we have a problem in Greece. And we're now in a kind of a strange situation. You know, for decades, people thought that bad news meant it was time to buy gold. But now we're in a situation that if we have bad news in Greece, what are people going to buy? They're going to buy the dollar. And they're going to buy it just as fast as they can. But buying the dollar is a huge problem for gold. It's a problem for any commodity that's denominated in dollars. It's more expensive for anybody who is denominated in any other currency to buy it, and that's part of the reason that we see gold falling right now. It's because the dollar's stronger.
Wait, there's a problem in Greece?
You haven't heard?
Okay, my point. No, listen, my point is that the problem in Greece has been beat to death. There is a problem in Greece that isn't changing. That is, they can't pay their bills. So they either get bailed out or they default. To me, it doesn't seem like there's much flexibility on how that situation works itself out. To me, that's almost become like just a constant, and everything else then is the noise that's going to push gold around.
Well, Jackie, to a certain degree, it is a constant, but it's a constant buzz. And we get a little bit more news about Greece every day. And again, as long as we're continuing to get bad news about Greece, that's going to be bad news for gold.
Greece.
Yeah, and in the past, gentlemen, the one thing that has sort of saved us with the gold trade has been geopolitical risk. And I'm not talking about the debt crisis in Europe, but I'm talking about what we've seen over in the Middle East. Even though there's been some strife there, things seem to be relatively calm. And gold doesn't really respond in the same way that it once did to events that even happened there. Right, Jim?
Yeah, well, not only that. Okay, think about it. You said things seem relatively calm in the Middle East. We've seen several years of not calm in the Middle East and a lot of big things that happen. I think it's almost the gold market has become somewhat numb to that. Because remember, when those things were happening, it was also the same time that Japan and the euro were just trashing their own currency. So gold was getting dragged down with that. So if you were then buying gold every time there was geopolitical risk, you would have gotten it handed to you time and time again. So I think for now, until there's something really big, that relationship might be done.
Right. Okay. So go ahead. Trade gold for me. Give me the levels that you're looking at right now,
okay.
Jim.
This trade is part of the fact that gold is in a relatively tight range. So I want to see it break out of the range first and then jump on board. If the August gold contract trades 1173, I think that's a spot to sell it. It's going to accelerate below 1170, but I think you're supposed to get on a little bit ahead of time there with a target of 1150 on the downside. If it trades back above 1186, that's where I think you're wrong and you wipe yourself out.
Scott?
Jackie, I like this. And Jim, what Jim is doing is he's waiting for a breakout. He doesn't want to get caught in the middle of this recent range. And that makes a lot of sense. So he's going to sell it once it breaks out, once it starts to make a new low, that is, move to a new lower range, and I think his direction is absolutely right. You point out the fact that gold hasn't responded to the upside when we see problems. Why is that? Because there are now a million other things for people to buy if they have some sort of geopolitical concerns, whether it's the dollar or treasuries or the VIX or anything else. They're not buying gold anymore. gold's going to sell off as interest rates head higher.
We went through this whole segment, by the way, and Scott never said an expensive doorstop, which is
That's
his
right.
catchphrase on gold, and I'd like to throw it out there because I like tradition.
Well, but Jackie and I had a bet that we could get you to say that instead.
You win that, right?
Let's put a pin in the gold discussion, guys. We'll go ahead, get the bottom line here, and move on. We are trading gold. We're selling it, according to Jim, at 11.73, targeting a move down to 11.50. Since each point is worth $100, Jim is risking 1,300 to make 23, and Scott is behind this trade.